Peter Elston, head of Asia Pacific strategy at Aberdeen Asset Management, which helps manage about $270 billion in assets. Peter, good to have you on the program. So what about downside risks in Asia? Are they still existent considering what's happening from the European side, or is it all guns blazing right now in the markets?
Well, correlations between Asian markets and major markets like the US or those in Europe are still very high. You're looking at correlations in the region of sort of 85–90%, which means that obviously our markets here are dominated by what goes on in the outside world. And that means that you know, the major threats are with respect to what happens in Europe, are with respect to what happens with Greece, and well, we all know what the downside risks there are.
Yeah, okay, but it looks like I guess Asia and global markets are choosing to look and focus in on the positives instead. Look at the start to the new year across the globe, and that's in spite of the fact that earnings, a lot of people have said, are disappointing and will continue to come down.
Yeah, well, you know, there are two reasons that stock markets can go up. The first reason is if there are better expectations for growth, and the second reason is if the discount rate is falling. In other words, the markets have to rise. If your expectations for equity returns fall, then markets have to rise in order to reach a level from which returns are subsequently lower, and I suspect that, you know, the reasons for markets having risen in January were predominantly relating to the latter, the fact that, you know, Bernanke came out and said that rates, instead of being low through the middle of next year, they were going to be low through the end of 2014. I mean, that was a remarkable thing to say, and when you have this backdrop of ultra-low interest rates, it almost doesn't matter what happens on the growth front. The fact is, markets are going to get well supported.
Okay, so Peter, tell me quickly, for the rest of this year, considering all the gains we've already seen in January, how does this rest of this year play out? Well,
it's always hard to say how markets are going to do on a one-year basis. It's particularly hard at the moment because you know, the tail risks seem that much greater than they would be in a normal situation. You know, we're dealing with very sort of non-linear equations at the moment. In the case of sovereign debt, you know, sovereign debt can, for a particular country, can be fine until it isn't, and these are the sorts of issues that we deal with, and frankly, from an investing perspective, it's very hard to take any active position one way or the other at the moment.
Okay, Peter, thank you so much for talking to us this morning. Good to see you. Peter Elston of Aberdeen Asset Management from Singapore.